Guys, happy November 1st, 2023. Chris Pesek, broker associate at Pesek Properties, longtime Austin resident and Austin real estate broker. Guys, if you've been watching my videos for a while, I keep talking about this guy named Mark Sprague. Mark is an analyst, a market analyst, and works a lot with Independence Title Company here in Central Texas. And he is I think they call him the Chief Data Officer. The guy's been studying, he's been a real estate developer. He's been studying market trends for years and years and years. Especially ones in Central Texas. And this guy gets called all over the world
in a quarter
to
mile,
talk
keep
about,
left to stay on West 2nd Street.
Sorry about that. To talk about what's going on, not only in the Austin real estate market, but Texas and the United States. And it's not even just real estate. It's just general
keep left to stay on West
money
2nd
market,
Street.
right? And what's happening with jobs and industry and stuff like that. So this morning I was on a call with Mark.
Continue on West 2nd Street for 1.5 miles.
He has said a few different things at the exact same premise. Austin real estate is not going anywhere. If you've paid attention to me, I've told you this for a while now, and it's more based on his thoughts, but I've backed it up with other analysts. Ted Jones out of Florida is another one I listen to, and a couple other ones. Those are the two loudest voices, or the two strongest voices that I hear. But here's the idea. Everybody wants to say, oh, the market is down, from last year or the year before, and that's a fact, and there's no arguing that fact. But the part of it that you have to keep in mind is that since COVID, we haven't had a normal market. It has not been a normal market. You don't see 20 and 30% appreciation in a normal market. That was an anomaly, and that anomaly came, that anomaly went, and we are where we are, which is, if you look back historically, and I've done videos on this, if you look back historically, we've got this little trend line in Austin that keeps gaining value, the housing market keeps gaining value, and we're above where that trend line had been trending if 2020, if COVID in 21 and 22 hadn't happened. So our market value is of a higher value than what it should have been projecting out in 2019. And Austin as a whole has not given back that market. The money that we've made has not been lost at this point. One of the things that Mark is quick to point out, that when people are talking about the Austin housing market dropping and a bubble and all this other stuff, what they're talking about is our median home prices have dropped. Okay, and that's a fact. Median home prices has dropped. I'm not smart enough to figure this out, but this is what he explained, and I'm smart enough to catch on after he explains it. We've had a 3% increase in mortgage rates, interest rates, since 18 months ago, okay, just starting in June of 2022. 3% increase in interest rates. Okay, the numbers say that for every 1% increase in interest rates, your buying power drops 12%. So if you could afford a $300,000 house and interest rates go up 1%, then now you can afford, for lack of doing a lot of math, you can afford a $260,000 house because you've lost 12% of your buying power. Okay, well, in the last year and a half, people have lost not 12, not 24, but 36% of their buying power. So obviously the houses that are being sold have shifted down in price. That's why our median values have dropped, but our average values really haven't dropped all that much. And what we're seeing with that, one of the things that has been hit the hardest is the luxury market. And obviously if you lose that luxury market, then your averages are going to skew down a little bit also. But what he cautions, and I did, and I went in and I looked, in Dripping Springs, I looked in individual neighborhoods, different parts around Austin, within specific neighborhoods, and not like, you don't have to look for specific neighborhoods, within neighborhoods. If you look, those values really haven't changed from 18 months ago. What has changed is there's fewer resale homes available. That resale market is slow. But again, I've talked about it in other videos. We're in a market of a necessity market. I'm not going to give up my 3% interest rate that I've got on my home unless I absolutely have to sell that house for some reason. Okay, that's a need to market. During COVID, we were in a want to market. I want a second home. I want a third home. I'm getting this loan damn near for free. I'm paying 2.5%, 3% interest. That's almost free money. I want a home in Colorado. I want a home in Florida. And so we saw a huge want to market. Now that's gone away. It's a need to market. Okay, that's fine. That's the exact same thing that we saw prior to COVID. Again, you've got to get rid of the outlier. Going back, people moved because they needed to move. There was a death in the family, there was a birth in the family, there were divorces, there were marriages, there were job changes. That's a need to market. If somebody wanted to upsize, somebody wanted to downsize, whatever that looked like, it wasn't just hey, I'm going to move because money's cheap and my housing has appreciated in value. Our housing has continued to appreciate in value over that last 18 months, but our inventory for resale homes is lower than it has been I'm thinking back what he said, and I'm thinking back to what I've seen. It's probably lower than it's been since 2018. Because our COVID inventory was really high because everybody thought they hit the lottery and they were, selling their houses just to see what they could get, just to see, can I get multiple offers and then I can go buy this other house, or I can buy two houses, I can buy an investment property. That's what was happening during COVID. So kind of fast forward through all of that, we are exactly where we expected to be if you take out the anomaly. Okay, that makes sense to me finally. And what he says going forward, here's the crazy thing. We have a shortage of resale inventory. The builders are going to pull us through this. New home construction is going to pull us through not having any inventory. But with the builders, just like they've always done, when they sell 2, 3, 4, 5 houses, now they're giving incentives. They're giving some incentives to close them. But when they close those houses, they're still raising the prices. They're not dropping those prices. So we're going to see our prices continue to incrementally go up. Now, it's going to be more back to normal. It's going to be single-digit appreciation in the Austin area, not double-digit appreciation in the Austin area. So the new home builders are going to take us through, but here's the thing that he pointed out. Okay, everybody says that the supply chain issues have gone away. Evidently, they really haven't. We just have a lower demand. At the beginning, or actually in December of last year, Mark said that he expects new home starts in the Austin area to be down 56%. And he was saying this morning it wasn't quite 56%, but it was over 50% that the starts were down. So there's less demand for building materials, for lumber, for appliances, and for all of that other stuff. And that's not just in the Austin area, that's kind of across the board. Because remember, when interest rates went up last year, all the builders freaked out. They stopped building, they stopped construction. If it was not under contract, they were not building it. And we talked about it at the time. I talked about it at the time that was going to come back to haunt us. Okay, well, right now we're not seeing supply chain issues because we don't have the demand, because builders haven't ramped that production back up. They're about to start ramping production back up. So we're likely going to see disruptions in the supply chain again. We're likely going to see disruptions in building material and increased building material costs. Like he said this morning, we still haven't built, most of our lumber for construction comes from Texas. We still have not seen additional lumber mills built. We don't have additional contracts on bringing in trees and to make lumber. Those things have not been corrected. We don't have additional manufacturing for housing supply production. So as a result, he's seeing right now building cost is going up 4 to 5% every month. Guys, that's a 40 to 50 to hell, it could be a 60% increase in construction costs every year. Okay, so if there's an increase in construction costs, what do you think the builders are going to do? They're going to increase their costs to cover that. They're not going to take a hit. There's nobody that's going to build and sell a house for free. So what's going to happen to our home values? They're going to continue to go up. Right now, we're in a little bit of a lull in the market. November through January is typically a time when I encourage investors or people who have the ability to wait to shop for houses, because you've got builders that are trying to get inventory off the books for the year. They're trying to finish out their fiscal years, and they're willing to give even better deals and more incentives at the end of the year, just so they can get those inventory homes off of their books. Hell, this morning I saw something that if you contract to close it before November 30th, they are giving something like 8% in incentives for closing costs, rate buy downs, and everything else. Guys, on a $400,000 house, that's $32,000 in incentives. That's insane. But again, they're trying to get these things off their books to make the numbers look better for their investors and everything else, right? These are large companies. These are large corporations. They're publicly traded corporations. So that's what they're trying to do. So that's why I always encourage people who can buy at that time to buy towards the end of the year. Anyway, fast forwarding just a little bit, what are we going to look at going into 2024, 2025? We're going to look at continued appreciation in home values in Central Texas. We have a shortage in resale homes on the market. Builders have to keep increasing their prices so that they can pay for their construction costs. So our values are going to continue to go up. Okay, well, what does that mean? That means if you're wanting to buy a house, whether it's for an investment or to live in, you're not going to get a lot better time to do that than right now. Here's two things that we know. Values are going up and interest rates are not coming down anytime soon. Jerome Powell just talked this morning. They're not talking about cutting rates. Our interest rates are where they are probably for the majority of 2024. That's becoming more and more clear right now. But housing prices are still going to go up. So if your interest rates being 3% higher than they were a year and a half ago have taken 36% off of your buying power, but houses keep continuing to get more expensive, you're going to be able to afford less and less. The finish out in the house that you can afford at $300,000, if next year that house is $350,000, in order to buy a $300,000 house, your finish out is going to be lower. I think that's pretty obvious how that looks. So I'm not beating my chest. I'm not trying to be a used car salesman and tell you got to buy a house, you got to buy a house. But if this is what you're wanting to do, moving forward, you're going to be in a worse position. And I think Mark's exact term this morning was, if people are waiting for the bottom to fall out in Central Texas, they're going to be sorely, how did he say it? Something about being really, really hurt when they find out that the prices don't come down, and that when the interest rates do come down, everybody's going to come flooding back into the market at one time, all the buyers that's pent up right now, and that's going to cause the prices to go even higher. So again, this is a cautionary thing. If you want to use me to be a realtor in Central Texas, I would love to help you out. I've got a ton of knowledge here. If you want to use somebody else to be your realtor, just make sure that they're good. But if you're trying to buy a house, if you've been wanting to buy a house and you're stuck in a rental, and by the way, yes, rentals are as cheap or cheaper than a home mortgage right now. Yeah, but you're not getting any appreciation in home mortgage, and everything points to our appreciation continuing to increase right now. So yeah, let's say it's $3,000, whether you're in a rental or you buy your own home. Okay, that costs the same, but you don't get the appreciation and you don't get the tax savings for mortgage and all the other stuff if you're renting a house. And again, I know it sounds like I'm trying to sell you a house. I'm really not. You can use any realtor. Hell, you can go directly to a builder. I encourage you not to do that because they'll take advantage of you. But you can go directly to a builder and buy a house. What I'm trying to tell you is that our market is not going to fold. We are not in a bubble in Central Texas. We've still got 150 people a day moving to the Austin area. 150 people a day are moving to the Austin area right now. Corporations are coming in. The GDP locally in Texas and in Austin is super, super strong. Austin is one of the top 3 GDP markets in the United States in major metro areas. That is a strong, strong GDP. People are coming here. All of that leads to increased property values. I think I've beaten that horse enough. I'm going to be done 15 minutes here. Guys, give me a call. This is what I do. I study data. I understand data. I know where to look for the best pricing on houses. If you're concerned about not being able to find a good value, this is what I do all day, every day. This is what I live for. So reach out to me. I'm getting calls like this from people all the time. and I love to help them out. So give me a ring. All right, talk to you soon.